Wall Street just quietly finalized the single largest private capital deployment in the history of technology. 5 private credit titans, led by Blackstone and Apollo, have assembled a staggering $500 billion debt syndicate. But they aren't buying tech stocks, and they aren't lending through commercial banks. They are financing something far bigger, the physical engine of AGI. And behind every single dollar sits one company, Nvidia. Here is what just happened behind closed doors. Wall Street's biggest private asset managers, alongside Nvidia and major cloud providers, completed a $500 billion private credit financing framework. Instead of waiting for commercial banks or diluting corporate shares, this massive syndicate is funding gigawatt-scale AI data centers, Blackwell GB200 superclusters, and dedicated nuclear power connections across North America and Europe. It is the secret financial machine powering the entire AI supercycle. To understand why Wall Street had to step in with $500 billion, you have to look at the massive physical wall big tech just hit. Training next-generation models like GPT-5 and Gemini 3 requires tens of thousands of Nvidia GPUs running in unison. But building a single gigawatt data center costs over $40 billion when you factor in liquid cooling and power grid substations. Commercial banks are constrained by strict Basel III capital regulations that limit how much illiquid debt they can hold. At the same time, hyperscalers like Microsoft and Amazon wanted to avoid taking hundreds of billions in direct debt onto their balance sheets. A new financial mechanism was desperately needed. Here is how this mind-bending $500 billion financial engine actually works. Instead of a direct loan to Nvidia or Microsoft, Wall Street creates special-purpose vehicles, or SPVs. These SPVs raise capital from private credit funds, pension funds, and sovereign wealth funds, offering 9 to 11% yields. The SPV uses that cash to buy thousands of Nvidia Blackwell GB200 NVL72 racks and construct gigawatt data center facilities. Then, hyperscalers sign long-term, non-cancelable compute lease contracts to rent those GPUs. The GPUs themselves and the guaranteed cloud leases act as direct collateral for the private debt. Nvidia sells its hardware upfront for cash, hyperscalers get immediate access to massive compute without ballooning their corporate balance sheets, and Wall Street collects high-yielding interest backed by the most valuable asset on Earth, AI compute. Why is this $500 billion deal the ultimate game-changer for AI? Because it removes capital constraint from the hardware roadmap. With guaranteed private debt financing, Nvidia can scale full-rate production of its Blackwell GB200 architectures and prepare its upcoming Vera Rubin platform with complete demand visibility. Furthermore, this money is directly funding new utility power purchase agreements, including small modular nuclear reactors and geothermal power plants built specifically for AI clusters. It guarantees that the physical infrastructure for artificial general intelligence gets built regardless of short-term stock market volatility. Now, what are the risks? Critics on Wall Street are asking a crucial question. What happens if AI revenue generation falls behind this $500 billion debt pile? If all the GPUs depreciate faster than expected, or if software monetization slows, these private credit SPVs could face refinancing pressure. However, supporters point out that cloud compute demand continues to outstripping supply, and long-term enterprise AI adoption is accelerating. This $500 billion deal isn't a speculative gamble. It is the foundational plumbing of the next industrial revolution. The AI race is no longer just about algorithms and software code. It is about capital scale, physical infrastructure, and raw electrical power. Wall Street's $500 billion private credit deal proves that the world's smartest money is betting everything on an AI-driven future. What do you think? Is this $500 billion private debt deal a genius financial innovation or a dangerous credit bubble? Drop your thoughts in the comments below. Like, subscribe to NextGen AI Tech, and ring the bell for daily AI news.